Good morning, good afternoon, everyone. Thank you for taking the time and joining us today for our March episode of ARIVE University. Today is March 1st. Technically, meteorologically speaking, it is the start of spring, so I welcome everyone to our spring episode. For those who are joining new, ARIVE University is a bi-weekly series that I host where we talk about new features we are launching on ARIVE platform. This is an interactive session. If you have any questions, feel free to use the Q&A tab below. This is being recorded as well as live streamed on ARIVE Mortgage Brokers. Today, I'm truly excited to have one of my good friends, longtime good friends, co-owner of Nextdoor Lending and the new CEO of AIME, Jonathon Haddad, join us. So thank you, Jonathon, for taking the time. Jonathon and myself share many common attributes. We put a lot of hours, we work really hard. I'm a first-generation immigrant. He's a first-generation citizen, so I'll let him share his story, how he got into mortgages and transition from retail. And then we will look at some of the new features. So we'll just listen to Jonathon's story a little bit, what he's up to, what is cooking on his side. Then we'll look into new features coming on ARIVE platform. And then Jonathon is going to share some cool tip and tricks. He showed this to me some time back, and I was blown away. How he writes loan, how he saves deals, how he helps other loan officers on ARIVE so they can get the most value. So I'm really looking forward to this session. If you have any questions, again, feel free to ask them away. So with that, Jonathon, welcome.
Thank you, sir. I appreciate you having me, man. I'm really excited. I won't even lie to you. So I've been using ARIVE for quite some time now, and excited to share some of the tips and tricks, that's for sure.
So how about your story, Jonathon? I think you mentioned like how did you get into mortgage? Go about.
Yes, sir. So I'm first generation Middle Eastern American. So my dad grew up in Syria. My mom grew up in Palestine, and my dad came to the country when he was 18 years old. Literally kissed the ground when he got here. Still absolutely loves this country. Hasn't gone back home to visit. Tough to go visit Syria nowadays, just to be completely upfront. But no, they came over here, and they set the groundwork, that's for sure. And there's just things that as you know, there's just certain things that your parents aren't able to teach you all the time. Because my dad's version of success was getting to America. He grew up in a mud hut, literal actual mud hut, where they had to boil water outside to even take baths, the whole 9 yards. So I'm very grateful to have this opportunity. But for me, my journey's been quite a fun one. I've been working since I was really young. It's just very common in my culture. As the oldest son, where you start to help around the house, you start to help with the family. I'm sure that's probably similar in your culture as well. We've talked about that in the past, especially being the oldest. So at about 12 years old, I started working for my uncle's dollar store. And by the time I was 14, I was really, I was going to school. I was getting picked up from school. I was going to work at the dollar store. I'd go work till midnight. And then I'd go back to school the next day and I'd get picked up. And I was actually helping my parents out, just get through a difficult time like a lot of people. I'm sure they've gone through even crazier struggles than myself. So that's been my life, is a lot of work. And it's not something I'm afraid of. As you know, we kind of share, we'll text back and forth on random hours of the day, especially late into the night. You're never sleeping and you reply to everything. I try to do the same thing the best I can. But I ended up, was going to college. And I ended up dropping out of college, and my parents needed some help again. Some things came in financially that they got tough for them. So I was like, all right, let me get into the bartending world. I've always liked people, like making drinks. So I was like, let me just get into it. So I started bartending. And when I was about 20 years old, this guy walked into my bar, and he was dressed to the nines. And as a 20-year-old young man, you notice things like that. He had the Rollie on, he's got the Ferragamo on, the Burberry, all the things as a 20-year-old young man. You're kind of like, oh, I don't know what that's like. Haven't had that before. So he got me excited. I kind of took very great care of him. And by the time I finished, he said, hey, how much do you make? He asked me. I said, that's a weird question to ask somebody. He's like, no, how much do you make? I told him. He's like, you want to make triple? I was like, well, I mean, what do I got to do, right, to make triple? So he talked to me about mortgages, and I went back home, talked to my mom and talked to my grandma. And my grandma said, listen, God put this in front of you. So school's always going to be there, but just go give this a shot. And if you want to go back to school, and if this doesn't work, go for it. Turns out it worked out really well. I'm in almost 11 years later now, and that's been my journey. I was in retail for 6 years, and then joined the broker space and have been growing next door lending and been doing a lot of fun stuff, man. And this is you either love it or you hate it. That's what I say about the mortgage industry. But you catch that itch, man. And after a couple of years of doing this, good Lord, it's just been unbelievable and very, very grateful for me and my family. And it's something that I'll never look back on. I'll tell you that much.
Yeah, no, thank you. So this is great to hear. I think one thing which I, feel is our culture teaches us one thing called grit, never give up. You just put hours and put your best, in this great country. If you are determined enough and you are never giving up, you'll make it. So that's what I have learned. This is my third company. My first two ones did not go as planned, but you never give up. And tell our audience more about your production. You mentioned you are north of 800 million and doing really well even in these markets, so.
Yes, sir. So next door lending. So last year we did about $832 million. We have a few branches, direct to consumer. I know all the comments. It's all right. But of those comments, 150 million came from direct to consumer. The other over $600 million literally came from self-generated business from our branches. Myself, I am still a producer. I stepped out of production for a little bit to help scale the company and just bring on more branches. Love being in front of people, love talking, love connecting. I know where my heart is at, right? And so you can kind of showcase that to people sometimes if they're willing to listen. And so that's my passion. I got back into production back in April of last year is when I got back in full time. So I'm all self-generated. Last year I ended, it's respectful. This year I'm going for 100 loans. Last year I finished with 60 loans for, I think, a little over 20 million, all self-gen business. But the most important thing was growing my team. So I started with 3 people in April, and now my outside sales team, we're up to 20 people. And I'm looking forward to scaling that. But it's a lot of just tips and tricks. People are looking for resources. It's been a tough 24 months for a lot of people. Like it's not like it hasn't affected me either. So just being there as a positive resource, like you need positive reinforcement around you at all times. I think that's a big thing, because when you're alone with your thoughts all day, it can get dark. I mean, your mind can go down crazy rabbit holes. So it's just been important for me to keep good people around me, a lot of people from a resource standpoint, but also just tips and tricks, how to help close more loans. Because it's surprising how many loans people lose by just not knowing a couple of the nuances that you can really help yourself when it comes to an LOS system.
Yep. No, and we are looking forward to learning all those nuggets and tips and tricks, like by which you're not just doing loans yourself, you're helping the community, you're helping your loan officers. So I'm pretty excited about, when you told me how you used, chat GPT with ARIVE, or, doing these HELOCs where second liens don't make. Yeah, I'm really looking forward to how the experiences you've had teaching your own officers now the entire community can learn from. So thank you for doing that. So before we dive into those tips and tricks, I'm going to just take 5 minutes to tell our audience, what is coming in ARIVE in next, few weeks. It'll be a quick 5 to 6 minutes refresher. I am sharing my screen. Hopefully everybody can see that. So as you all know, our ARIVE's development is primarily driven by customer feedback. We are always listening to new ideas, new topics. If you have a suggestion, post it in our Facebook group, ARIVE.com, ARIVE Mortgage Brokers. We have more than 11,000 members. Any new ideas, any issues you are having, anything you want to see in ARIVE, post it away or send it to feedback@arive.com. We have a fairly large internal team that looks at every input or suggestion that comes in. Again, I want to thank the community for being with us, being so passionate and loyal, and we are listening to your feedback. So starting next week, one of the features we are excited about is supporting QM tests. We are being used by many non-DELs. They kind of fund their own loans and then they get sold. So one of the requests was like, I really need to do the QM test because I'm accountable for this loan. So we are going to add that. So you can click a button on fees and, it will look at which fees are APR, high price mortgages, APR testing and getting all those values. So it will tell you at least at a high level, will this loan pass the qualified mortgage test? So we are pretty excited about that. Then one more feature we are launching, again, based on feedback. We are more than 20,000 users, 3,300 broker companies use us daily to run their business. And we have 13 integrated partners. So one of the features which will go live is currently you can only see pricing from approved lenders. That's how ARIVE is structured because we know your comp, how you're set up, the fees, all that. But we have figured a way out starting later next week. You will be able to see pricing and products that qualify for a given scenario from all ARIVE lenders. So whether you're approved or whether you're not approved, so we will default your LPC, and that way we can present more options to you. So if the current partners you're approved with are not pricing great, are not qualifying products you're looking for, you'll be able to look at other options. So again, we are pretty excited about this feature. It took us a lot of time to develop, figure out, how do we, show this in an organic manner. So you see your lenders first, and then there is a way by which you can quickly look at what other options are available in the ARIVE marketplace. We are also going to handle MI a little bit different. Jonathon mentioned how important MI is. We are currently running best tax for lenders that do not have negotiated MI rates. So there are some updates, again, based on community feedback, happening on that side. Our revenue reports is fairly new. You can actually start tracking LO comp. That feature will become fairly sophisticated. Like you'll be able to dial in, branch fees and LO comp and LOA fees, multiple LOAs, inside loan officer, outside loan officer. So we are getting all that dialed in by mid this year. We're going to polish our LO comp management. But revenue reports is new. That has been refreshed, so you can select multiple fields and get these reports out. We also added some updates. As you are updating dates in ARIVE, we are going to send events. So let's say you have a CRM, you pull credit, you want to do something. So those opportunities are now, in fact, this went live earlier this morning. So you can do that in ARIVE. So this is what is on our plate. We are always in action end of February, early March. That's our typical release timelines. By end of March, early April, we are going to support MCRV 6. This would be one of my takeaways. Like if you guys have not researched MCRV 6, I would encourage you to do that. It is completely changed from how you're used to doing MCRV 5. So again, we want to be ready for you guys, so you can still click a button and it gives you MCRV 6, just like you do right now. But it is a phenomenal or a fundamental change. There are supplementums and addendums and all that. So we would encourage you to look at summary of changes, and we will be ready. We are also going to support reverse mortgages, at least from capturing the information, the loan is reversed, and some other fields that go with reverse mortgage. That's happening end of March, early April. Spanish point of sale, this has come up many times. We work with many brokers who serve Spanish borrowers. It's a diverse community. So how do we allow capturing loan application in Spanish? The needs will automatically go out based on the language of the application. So we are again very excited about launching Spanish app. We are going to automate aggregate adjustment calculation. You can type that value in today, but we believe we can do a better job. So now there'll be a calculator and you can enter some simple fields, and based on that, it will spit out what the aggregate adjustments will be for that specific loan. We are working to do more integration updates with some of our partners, Newfi and Windsor. So, watch out for more videos and updates on that. We are going to bring on a new ARIVE partner by either end of March or early April. Our goal is to expand our marketplace and give you guys more diversity. I'm going to hold on to this name till we are more ready from launching. So at least 2 to 3 partners will go live in Q1. And again, our goal is to give you more options, more diversity. That way you can find the best deal for your borrower. We are also launching a new billing system. This is a pilot that will launch next month. A lot of our brokers are large companies. They want to pay by ACH, not credit card, do annual payments. So again, since we are hearing this demand, like how do I do bank payments, look at my invoices properly, send alerts if my subscription is expiring. So there are a lot of, again, feedback requests we got from our community. So we are changing our billing infrastructure so that we can support our users better. So a lot happening, a lot in action. ARIVE is always in action, as we joke. Jonathon mentioned, we work 18, 20 hours, not just myself. A lot of my engineering team is working all the time, and we're pretty passionate about that. That's what drives us. We think it's an amazing system. We'll keep adding more features. We are just kind of getting started, but we are super excited where this will go. Surprisingly, there are not many questions outside launching a CRM. So as we announced a few weeks ago, we will be launching a CRM in phases or stages. It's a big project. So I don't want to say, yes, we'll have a CRM. So the first thing we'll launch, as everybody knows, rates will probably go down Q3, Q4. That's what everybody's forecast is. That's what, a lot of, if you look at Fannie Mae, Freddie Mac, even MBA, they're forecasting rates will go down towards end of this year, and we want to be ready. So one of the features we are very excited about is ARIVE has all these closed loans. Loans are closing. The rate where the borrower was. We know the scenario which the borrower had. We know the EPO windows for different lenders. When you are out of the EPO lenders, we have a lot of rich information. So how can we magically look at all this information and tell you, here are the borrowers that can potentially refinance because rates have gone down, and then automatically send campaigns to these borrowers. Hey, I put you in a house 7 months ago. I promised you if there's a better opportunity, I'll come back to you. We think we can save your rate can go down by X amount, and or your life of loan savings can be $100,000. You have to pick big numbers. So our goal is how can we put you back in touch with the client? Because our opinion is when rates go down, borrowers will refinance. So how can we be ahead of the curve and give you tools so you can reach out to these borrowers first? And the magic word is automatically. If you have to go in and run queries and searches, it is a lot of work. Since we have a lot of loans which have closed, we know their rates, we know the coupon, we know who the investor was, what is their EPO period. So what we want to do is, again, you can change the parameters, like which investors you want to look at rates. Let's say you don't want to look at some investors. We will even add property appreciation to this model. House prices are going to appreciate no matter what. So again, the idea is so that our LTV calculations are more accurate. But we are pretty excited about this, that how can we automatically surface opportunities which are potential refinances and send out campaigns to these borrowers. So that's our first version of CRM this year, which should go out, as I mentioned, by Q3. Hopefully before the rates go down. They have gone up, as everybody knows, last few weeks. But yeah, that we are excited about that. So the Zapier API for loans is out. The CRM is a built-in CRM. You don't need Zapier. But if you have a CRM like Shape or Be in Touch or Surefire or Bonzo, so those models are still very much supported. So if you're already invested in a CRM, we will be adding lead capture to CRM integration. So as leads get captured in ARIVE, there'll be CRM updates happening for that as well. So we'll keep our system open. But this CRM we are talking about is something native to ARIVE that will use our pricing engine and lender integrations to alert clients when rates are going down. So you can approach them before anybody else does. So you can run AUS with soft pull today. If your credit vendor supports this, I think the message is a little bit confusing. Fannie Mae opened up running AUS with soft pull. Even Freddie supports that. So if you need any help, contact our support. But you should be able to run AUS with soft pull, assuming your credit partner supports that. So when you run AUS with soft pull, Fannie Mae is pinging these credit agencies for trended data, what have you. So assuming your credit vendor is approved with agencies, you should be able to run soft pull in ARIVE today. But good question. So I was really fast since we have so much to cover. We got a few good questions. So with that, if there are no more questions, I'm really excited how Jonathon runs his day, how he's writing loans himself, how he's helping other loan officers, save deals. So I'm going to hand it over to him. Jonathon, you want to share screen and explain, how you're
I'll actually, we'll start with what everybody is so interested in, which is Chat GPT. I'll share my screen on this one. So listen, Chat GPT is so incredible and fascinating. And I think what people don't utilize as much is its ability to analyze data. So what I'm going to show you is required to have a premium account. So it's $20 a month. But one of the things is, ARIVE, what they did is they have certain protection and protocols that they have to get approved for, called I believe it's SOC layering, that you guys have to pay quite a bit of money. And this protects your consumers' data. And so please understand what I show you. I've removed a lot of the data points that may be potentially dangerous in the event that there's a breach with ChatGPT, because you don't have that same protection that ARIVE has paid a lot of money for to ensure that you have for your clients. So I'll show you one of the ways that I've leveraged it quite a bit for processing. And it's really, really cool. ARIVE obviously built a really nice reporting system recently. And with inside of this reporting system, what they did from there is ensure that you can set up your own reportings to come out on a daily basis, whatever the case may be. And so we set one up for, there we go. We set one up with for prioritizing our processing. So I'll share my screen here. Just let me know if you can see it on your end there, Harish.
Yes, absolutely. I love this. Go
So
ahead.
yeah, so this report was set up in ChatGPT, and what it does is it prioritizes your loans on a daily basis, a weekly basis, and it's super simple. So you can automate and set up the report the way you want it in ARIVE to always have it. So mine is called processing pipeline, and every day I simply upload the new one into the system. But what you do is remove a lot of the sensitive information, like the social security numbers. Please don't put that in there. Protect your client's date of birth, even the property address you don't need in there. So for me, the way I did it is I set it up to prioritize in this manner. And you guys can copy and paste these instructions. I'll give them to Harish to send it out to the community. I don't care. Have them, take them. You can structure however you want. But I created a priority list. And so what it does is it's always going to take the primary loan processor, which is our processing team that's working on the loan, and it's going to sort by the loan ARIVE ID number. And then I want it to take the stage name. And I only wanted to take the stage name for those that are approved with conditions and clear to close status, submitted to underwriting, and suspended. And I want it to prioritize these loans in this following manner. So for me, the highest priority, and this is for my business model, for yours, it might be different. So change it accordingly. But the most important thing to me is if the funded and estimating closing date, I want that as the highest priority. And I want it to pull closest to today's date for me. So if I have a loan that's estimated to close, but I'm not in CTC status, for instance, and I'm supposed to close in 5 days, that to me is a number one priority. I need to know, I need to jump on it. This is all hands on deck. The second priority for me is the submitted to underwriting dates with no appraisal order date as the second priority. So what it is this has been submitted to underwriting, but for one reason or another, we haven't ordered the appraisal. I like to know about that every single day. We have a processing team here that handles a lot of the back end. So I have to make sure for my loan officers and for myself that appraisals are being ordered correctly. Now, most of the time it's because inspection isn't finished. We want to wait, but I can't have things slip because it has slipped, right? It slipped in the past. You forget to order the appraisal. You're like, oh yeah, let me go check on it. I get it. I'm an LO. I've done the same thing. We've all done it. So I like to prioritize that as number two. Number three, the funded estimated closing date within 10 days of today's date with no appraisal completed. That's absolutely petrifying. This is a code red if you're in this situation. But again, you know, as you start to scale as a company, or even if you're not, right, you're not paying attention to it every single day. You're trying to really focus on realtor relationships like I try to do. You want to have that. And the last thing I prioritize it by is the submitted to underwriting date with more than 2 days from today's date with no approved with conditions. So basically, I've submitted the loan to a lender, but they haven't been able to get the loan out of underwriting yet, and it's not approved with conditions. Why isn't that approved yet? I can check on that later in the day. 2 days, you know, depending on the lender you're working with. Sometimes that's reasonable, sometimes it's not. But the most important thing is making sure that I'm aware of it. And, you know, why didn't it go approved? Did I get a kickback on something? Did they send me a restructure? Is it going suspended? Whatever the case may be. And then I just start the conversation by saying analyze. I'm not going to analyze this because, you know, I do have clients' names on here and ARIVE ID numbers, so I want to protect that. But literally all you do is you click analyze, it'll take this data and it'll put it in order by your processor and it'll prioritize it by this exact order. But you can prioritize it however which way that you want. Doesn't matter. This is just a really easy tip. I run it every single morning, and it's really shocking because I literally just send it to the LOs, send it to the processor. It's the first thing I do every single morning, and it's pretty easy to do.
Yeah, no, thank you, Jonathan. I do want to kind of again say, like, you know, he figured this out on his own. You know, ARIVE didn't tell him anything. You know,
Correct.
This is again if you're not using ChatGPT, just at least take a look. You know, artificial intelligence is kind of coming, so we should not shy away. And he, you know, Jonathan took precautions. Client information. So anything you give to this big LLMs, as we call them, it is out in the wild. So your client's information can be used for training, all that. So please be careful what you share. But sharing anonymous information like IDs and dates, that's absolutely, you know, okay in our opinion. The other thing Jonathan mentioned is this is his process, and that's the beauty of ChatGPT. You can change these questions in whatever way you want. You want something else to bubble up. You want to look at some specific processors, you know, specific loan officers, you know, new loan officers, and you can have multiple versions of this. You can say analyze priority 1, or, you know, this is another way to look at it. So I think since that gives you this natural language experience, you can type it whatever you want, you know, play around with this and kind of iterate on that. So Jonathan, some people have asked this question. So
Yeah.
this interface you showed is a little different than traditional chat GPT, and you need to be on the paid plan, right? Do you want to, like, how did you go about building this? Do you want to show it? Like, how do you build a brand new, workflow? If you can at least talk about that.
Yeah, honestly, that's no issues at all. So you do need the actual $20 version that you pay for. But what you can do is I can share my screen real quick and show you how to build here we can build a simple one together here if this helps the community. So you just hit share. So this is the screen that you'll be at when you have the upgraded version of ChatGPT. And what it does is it allows you to build your own over here. You're going to click the button that says Explore, ChatGPT, and then in this top right-hand corner, move us over here, you can hit the button Create. And when you hit Create, it goes right to this screen in ChatGPT. And then you can start building whatever you want. So we can call this one how to do a training description, do a 30-minute training. And then you can literally give it the instructions on how to create anything, create trainings around first mortgages and HELOCs and make it under 30 minutes. Conversation starter, HELOC, just simple stuff. And then you can click go on it right away and it'll start building out the training for you. And then you start to teach it. So whatever it does right here, you're able to start teaching it what to do. So you can see it's already starting to create the instructions. And then what I start to do is start to build it the way I want it to be built. So one of the things that I do is like I'll upload a lot of my trainings from the past. So a lot of my PowerPoints you can upload into here. A lot of my agendas that I've done in the past. I've been at this for 11 years, a lot of leadership. So I have one already built where it's actually all of my agendas, all my PowerPoints, and then it builds trainings based on how I build trainings. So this one's actually really right here. It's super simple. It's called Agenda Ace. It's my own personal one that I build. And then you go to Edit GPT and you can see I uploaded a lot of my own knowledge in the background. And then it builds the trainings based off my knowledge. And then I tell it what I like it to do, how to build leadership retreats, how to do icebreakers, all this fun stuff. So this is really good for future leaders as well. I'm having one of my future leaders, Gabby, use this a lot right now. But super simple stuff when you start to get the hang of it. It just takes some time. I mean, literally, if you go on this for less than an hour, the $20 to me is worth it. Again, totally up to you. But the efficiencies that I've received from this is unbelievable because my days have become a lot more expensive just with what I have going on between the loans, the team, my company, Next Door Lending, and AIME. It's just very important for me to be as efficient as humanly possible. So super simple stuff on my end, and I hope that helps some of the community.
Yeah, no, thank you, Jonathan. This is really, really great. So glad to see you can share all these nuggets.
Oh, I don't care. Take it. Yeah.
Yeah, there are questions on HELOCs and first lien and second liens. You want to talk about like how HELOC pricing can be so much better than second loans that we were talking about. You want to share how to price a HELOC and win more loans? So
I absolutely, I'll jump into it. I'll answer Mike's question real quick that he asked. I had purchase agreement on there. Yeah, Mike. So what I do for purchase agreement is I extract certain things so I can copy and paste into ARIVE for myself on there. So that way it can pull like the earnest money deposit for me. It can pull the listing broker name for me. And it's just easier to copy and paste into the contacts. I like to make sure my contacts in ARIVE are absolutely flawless just from a tracking and data purpose because as we started to scale, going back to fix it was an absolute nightmare. And so I promised myself never to put myself in that position again. Data is very important. There are multiple ways to input data. I like to do it the best that I possibly can so that allowed it to make it easier for me. But I'll jump right in to the PowerPoint side of it here, and we'll take it from there. If that helps. So let's see, share my desktop, pull up the PowerPoint, and here we go. Harish, let me know if you can see it on your end.
Absolutely. We can see it. Go for it. So.
All right, perfect. So first one I'll talk about is HELOC pricing. So a lot of times for second lien HELOCs, I think the biggest thing is just making sure, listen, as an LO, I really believe it's our job to make sure the 1003 is as close to perfect as possible. When I first started as an LO, I really feel like, you'll cut corners here and there. You won't put in something correctly. You won't dial into, some of the things on the 1003. You'll put in a wrong address for the client's employment. Like, I get it. We all do it. We're trying to fly through things, fly through our days. But look, especially the last 24 months, You know, it's just been so important to make sure that your data and information is perfect, especially with the changes Fannie and Freddie are coming to. It's getting harder to have a loan go AE, rightfully so, right? They have to protect their assets. We get this money from investors. All right, this is their money, it's not ours. So if clients want it, we got to make sure that they follow the guidelines. And in order to make sure we're giving the best information, our 1003 has to be set up. So here's a really simple way to set up a HELOC in ARIVE. I'm just going to show you the loan and property screen right here, just an easy one. So what you'll do is you're going to put the appraised value of the home as a refi. You're going to set it up as a refi. You'll put the appraised value. Then you'll set up the HELOC itself and where it needs to be. And you can see it says HELOC, and that's because I changed the mortgage type to a HELOC. But it's super important that you mark it as a second lien because that's exactly what it is. And then you do the line amount. That's all something you figure out. But right here is where a lot of people that I see make mistakes, especially on my team when they're newer jumping on board. It's super important that you make sure you put the loan in, the first mortgage that you're basically subbing to that first mortgage. So ARIVE has to ensure it reads it correctly, and you have to make sure you put it in correctly so ARIVE can read it. So in this case here, you simply click on this button right here that says first lien, other subordinate liens, and then you just follow these steps right here. Who's the current lender? You can get that from the client's credit report. You put in that it's a first lien, you enter the monthly payments, and then you enter the current loan amount of that loan. And then the fund source, it's a lender, right? That's who it is, it's a lender. And then in the right-hand corner, you can see other financing. You click yes, and you're simply matching this number right here to what the actual payment is on the first mortgage. This is going to make your life really easy when it comes to the pricing screen to get the right information for pricing on HELOCs. Because a lot of times, you'll tell your clients one thing and then you price it out and you got to go back and resell. Look, there's nothing worse. I've been in that situation more times than you can count. And it's just a frustrating, annoying call because you're overguessing it. You're second guessing yourself. Oh God, are they going to leave? I did it wrong the first time. So it's just something that's been really important to me when it comes to pricing out HELOCs and making sure you get it right, because we are doing a lot more HELOCs nowadays. And these have been good, right? Especially if clients can't get it from their bank or local credit union to get the pricing that they have. It's been really nice to have this option as a broker on our end, that's for sure.
Yeah, I think, and you want to talk about how the pricing difference was between the HELOC and the second lien, what we talked about earlier. Do you have that example handy?
So I do. I can dive into. So this one is everyone's favorite. So I won't go through the down payment assistance just yet. You're talking about this right here. So
right.
This is a mind-blowing way to leverage a HELOC. Okay, mind-blowing. People drop the ball on this quite a bit of times. And you can just see the big difference here, okay? So what you're looking at right here on ARIVE is very simple. This is a second mortgage. I'm sorry, this is a second mortgage. This is a second home pricing. So second home alone, here's how people price it. So imagine a client comes to you, $500,000 purchase. They want to buy a second home. You can see 10% down is the minimum requirement that they have. You can see the payments $34.38. Now, here's what's really fascinating. If you price this out, you can see the pricing over here on the right. This does not include any compensation, by the way, okay? So without any compensation, you can see right here, 8.125% interest rate is costing 1.139 when I price this one out. So without any comp at all, I have a rate of 8.125, and the client has to pay $5,125. Now, here's what's really cool. If you can use a second mortgage or a HELOC to offset this. If you use a second mortgage, here's how I price it. So same $500,000 purchase, client is still putting 10% down. What I do is I do a HELOC for 30%. So we have a first mortgage of 60%, which you can see right here, LTV is 60. We have a HELOC for 30%, and then we have a consumer putting in their own 10% to give us the full 100% financing, okay? So here's how you set this one up. Same thing. You want the purchase price here. You're going to put the total down payment at 40% because that's the total that the consumer has to bring to the table. Now you have to basically show ARIVE how you're making that up. I'm showing ARIVE that I'm making it up with a 30% HELOC. So 30% of this purchase price right here is $150,000. And that payment is going to be roughly $1,500. I believe that was a rate of a little over 10% for the HELOC, maybe even higher. And then what I do over here is I put in the other financing, right? Same thing. I put in the 1,500. You can see our payments are almost identical. If you looked on the previous screen, there was also mortgage insurance, right? There's no mortgage insurance on the screen. And now let's look at pricing. So that same loan that was charging 8.125, charging $5,125, is now charging for a 6.99. Look at the difference. It's charging $369 on a 6.99% interest rate. Now, the payment is almost identical compared to the previous one, but more importantly, the consumer is also bringing less to the table. Why? They're not paying that additional $5,000. They're not paying mortgage insurance, and they're applying more to principal because of the fact that they're getting the lower rate. Please make sure to have conversations. I have very deep conversations with clients about their risk tolerance. This might not be beneficial for all clients because it is a HELOC, right? And there is some variability to it. But to me, it's about the risk. You know, where are we at in the market? We do expect rates to come down. I show them the data, and then they make the decision for themselves. But more importantly, don't forget, because it's a first and second purchase, this down the road is also considered a rate and term refinance. It's not considered a cash out refinance because you're using the second to purchase the first. And on top of that, no one's going to touch you on pricing. When these cross my desk, clients are always blown away because of the fact that someone priced them at, 8.125, and I'm giving them a 6.99 or whatever the case may be. And they're asking me, how did you do it? How did you do it? How'd you do it? And I tell them how I did it right away. But these are conversations to have with your clients, making sure they understand the risk behind it. Do your due diligence as well. I like to always check like the principal, balance that's paid after the first year. The HELOC is interest only. So have those deep conversations. It's not just like, yeah, take this, it works great. Have conversations, but the difference in pricing is astronomical. And it's been a really easy way for me to win second homes, just to be completely upfront with you. So that's a pretty mind-blowing way to do it. Mm-hmm.
Yeah, thank you, Jonathan. I think this is these are such golden nuggets, like winning deals in these markets with rates being as high as they are. It is so vital. And having these, like you said, tips and tricks in your tool belt, like, how about we do this, and educating the consumer on options. We love that. And this video will be shared on our YouTube channel. And also this is being live streamed on ARIVE Mortgage Broker. So if you join that, you'll be able to replay this at your own pace. So, and we have some questions on HELOCs. Let's see, maybe Bill is asking. So this probably for ARIVE, like if it is a first lien HELOC, I don't 100% remember if we support that yet. It's not very common. So the question is, somebody owns a house, free and clear, and come back and say, give me a HELOC. So this should be supported. If not,
it is supported, Harish. Yeah, it is supported.
Yeah, thank you so much.
It is supported. Yeah.
So there's another question on how much is the $30,000 HELOC? It's a little, Angela is asking. Do you want to take that, Jonathan? How much?
Sure. The cost for it. So the 30%, Angela, it just depends on who you're using for this one. It just really depends. Sometimes it's incredibly cheap. It's also what you want to make, right? So for me, I choose not to make the money on it. I really don't, because, right, this is a repeat client. I explain what I'm doing. It's all about the service. I'm very good with repeat clients. It's something I really pride myself on. Clients always coming back to me, being the expert. But I have that conversation with them too as well. And I'm like, listen, usually what happens on these HELOCs is I have the ability to make money. I want you to know, in this instance, I'm going to waive it because I am making money on the first mortgage. But just know, one of the most important things to me is to make you a client for life. And obviously, I want to make sure I take care of you. And this is my way of showing my appreciation for you trusting me. And so I want to make sure I take care of you the best way I can. I really believe this is what's best for you and your family. And so that's how I structure the conversation. That's how I do it all.
Yeah. So Jonathan, if you're comfortable sharing what lenders you are using for HELOCs, do you mind if you're comfortable sharing?
Yeah. So so a lot of the HELOC companies aren't going to 90%. So there's been one as of late that has been going to 90, and this does change quite a bit. But right now, Spring EQ is going to 90 on the second mortgages. But that doesn't mean you have to use them for the conventional loan. So what I do, you can place that first mortgage with any lender you want, right? Same way that you're doing it now, and you're simply importing the HELOC, and it's just closing simultaneously. So you have to make sure your 1003 is done correctly, like I've been showing you. But Spring EQ is the one currently that's been going up to 90%. That was as of recent that I know. So that's who I'm using for the second mortgages, for the second home. Sorry.
Yep. Yeah. Great answer. And what term of HELOCs are you doing? Are you anything you can share on how you're structuring them? Like, So again, Adam is asking,
Yeah, let me see the question. What's Adam asking? I have a buyer running a HELOC, or what loan terms for the HELOCs? It just depends. You go through the products, Adam. You can search up Spring EQ and just kind of take a look at theirs overall. But it just depends. There's so many different ways. HELOCs. There's HE loans. There's HELOCs. Repayable after. There's 30 years, 10-year IO, 20-year fixed. There's 25-year. There's it comes out. Learn all these from the matrices. Learn all these from the guidelines, because you need to make sure your clients know if the HELOC is going to change monthly, quarterly, is it fixed? All of these are really good questions to make sure you answer for your borrowers. So I would just recommend that you read the guidelines, and there are multiple ones to choose from.
Yeah, thank you. And I will mention Jonathon, and I didn't get your permission. He's always available. I reach out to him anytime. So Jonathon always has an answer. He's reachable at odd hours. So I would encourage you to contact him directly. And he'll be happy to find time to support you. So if you have any questions on scenarios, how he's running his business, so he'll be happy to support you offline on that. So, all right. So
you want me to show the?
Go ahead.
Go ahead. No,
we
the
have
second mortgages.
So, and Jonathon, how do they reach you? You want to share your email or something on the chat? Like how do they contact you if somebody has a question on a scenario or a situation and they're looking for advice?
Yeah, listen, you can go right to AIME Group right now. With that right there, you can just literally do that at the moment. I'll get back to you literally as soon as I can. If you guys need some help on things, that's zero issues at all. Literally, I have no problem with that. That's no concern to me. Reach out, have some fun.
Yeah, we have a lot to cover. So how about you show them some other tips and tricks, Jonathon, like we were talking about?
So I'll show them one more that I absolutely love. So. All right. We deal with in Michigan, especially in Michigan here, we deal with down payment assistance. Okay. There's multiple types of down payment assistance, but there's two that we really work with. There's a grant basically that's forgivable, and then there's the repayable down payment assistance. So I'm going to show you both and how to set them up in ARIVE, because there are some nuances for these, and so I want to make sure you guys understand it. So the first one I'm going to show you is the repayable HELOC. Okay, I'm sorry, repayable down payment assistance. So with this one right here, the way you're structuring it, the most important piece when running AUS, there's guys and gals, there's nothing worse, because I've done it. And it's absolutely devastating, because you have to call and try and fix it. You got to fix AUS. You think you have a pre-approval. You're high-fiving people. You get a loan under contract. And then you submit the loan to the lender, and you did, you set it up wrong in the AUS, and all of a sudden you have approved ineligible or referral eligible, which God forbid on these down payment assistance can be an absolute nightmare. So the biggest thing with a lot of these repayable is you got to make sure the CLTV and HCLTV is 100%. You heard it right, 100%, because ARIVE needs to pick it up when you're running through FHA on this product. The way to do it, super simple, same things. You're going to hit subordinate lien. So you got your first mortgage up here, right? 119, 3.5%. What you're doing is basically saying, hey, we have the other 3.5%. It's another loan. It's a lender that's doing it. It's a second lien. You get the monthly payment of $44 a month. You have to make sure you include that for DTI purposes. And then you can see over here, right? The loan amount is exactly the same. All of that stuff's exactly the same. But you can see over here the structure of it. But the most important thing is this 100% CLTV and HCLTV. And then in the asset screen, just making sure that's done correctly when you're running findings to make sure you're going through things correctly. So this is a big deal for these repayable ones. Do not screw this up. And if you have issues, honestly, call your AEs that deal with the repayable ones. They'll help you walk through it. They should help you walk through it. But just make sure this is done right, because it's happened to me, and it's absolutely devastating running around in circles trying to get the loan back to AE. And then the last one here is the grant. So this is the grant version. You can see the biggest difference on the grant is the LTV is the same, right? 96.5. There is nothing. The asset screen right here. Please make sure that you have the right asset type. Please, please, please. If this is wrong, again, AUS will not pick up. And this has nothing to do with ARIVE. This has everything to do with your 1003 and ARIVE picking up AUS findings. So this is on you to do it correctly. You owe it to your consumer to do this right. You owe it to your consumer. So please take the time. I know it gets exciting, especially if there hasn't been a lot of movement, but it doesn't matter if the loan doesn't close. So make sure also under the sources for down payment, you update that correctly as a grant. It'll pick it up from the asset screen, and then this will allow you to run findings correctly. And then the last thing I'll show you guys is saving a loan. So quick scenario, and then Harish, floor is yours. But there's multiple ways to save a loan. I mean, I can't even tell you how many times I've saved one. You can see here what happened on this loan. It was a new build. It was a builder. And this is on me. I take full blame for this, okay? Full blame from this. This is back in May. Unfortunately, 90 days had passed and I had to repull credit. And I dropped the ball and wasn't paying attention to the credit expiration date because it's a new construction. When I repulled credit, unfortunately, the risk layering got a lot tougher and I lost my approved eligible findings 5 days prior to closing. And you can only imagine the amount of grief I was having trying to get this figured out. So it was a massive resell to the consumer, but we ended up having to run it through 46 times for me to get it right. I don't give up, I can tell you that much. So how we saved this loan from a 30-year, and it was a conversation with the client because the FICO dropped and a few other things that occurred, but we moved the loan to a 20-year mortgage. Remember that when you're trying to fix a loan, start thinking about it from the investor standpoint. All right, how can we showcase this loan to the investor that it's less risky than they believe? On a 30-year mortgage, it's the most amount of risk because it's going to take the consumer 30 years to pay it off. So when you start cutting the term down, the amount of risk that you have begins to really subside quite a bit. On top of this, with the FICO score that dropped, we moved it to a 20-year. We bought down the rate slightly. And then there's a couple threshold points for Fannie and Freddie on DTI, for back-end DTI and front-end. But I really like to play with these numbers here: 43 back-end, 37 back-end, 27 back-end. If you can start finding ways, paying off some debt, to help with that, more of a down payment, helping shop for, homeowners insurance to see if you can find that cheaper. And then also we had to shop the MI coverage with a lender that we were using on this. We shopped the MI coverage like crazy. And leveraging all of these tools, it was a resell. It was a difficult resell, but leveraging all of these tools right here, these are the 4 steps that got this loan from caution and eligible to approved and eligible. And we saved this loan, and the client couldn't be any happier with us being able to do this. Matter of fact, we're actually in process, I think about a week ago on this loan, in process to do a refinance as well. The consumer reached out. So really cool, unique tips on this front here that really helped us bring this loan to life. And there's so many other ways that you can do, but just think about the risk and how can you bring the risk down on this loan when it comes to getting approved eligible findings back. So those are my tips and tricks right there. I really hope that helps.
So I'll take the floor. So thank you, Jonathan. I think this was like one of the best webinars. Honestly, I do this often. We have had in a while. Even the attendance says it all. We have more than 200 users who joined, 200 brokers who got benefited from this. So again, I want to thank you for taking the time today. If anybody has any questions, we still have a few minutes left. I think what I learned from this is, as a loan officer, pay attention to 1003. You are accountable for properly documenting your loan scenario, your loan situation, how you structure it. You're getting an AE, which is nice, but if your 1003 is not correctly set up, that doesn't mean anything. So that's something I took away. Obviously, you should look at ChatGPT to improve your processes, how to cleverly use HELOC, structure first and second, whether they are repayable, not repayable. So we learned a lot today. So thank you, Jonathan, for sharing that. So this has been recorded, and we both of us went really fast just because we only had as much time. So this is available in ARIVE Mortgage Brokers Facebook group. So let me share my screen to make sure everybody knows. And this is being live streamed right now. But if you go to facebook.com, definitely join Brokers Are Better. That's a Facebook group by AIME. I'm a part of that. Our team is a part of that. We get a lot of good content. So if you have any questions for Jonathan after this, that's what he said. Post this on Brokers Are Better Facebook group. So I'm sharing my screen right here. Let's see if this works. So this is Brokers Are Better, facebook.com groups Brokers Are Better. If you have anything for him, say, Jonathan. I'm going to start with that. Jonathan, thank you for amazing webinar today. And then you can ask him questions. I'm not going to post this. I don't want to. So this has to be approved, all that. You have any questions for him? Feel free. He's already posting a lot of good content over last month or so. difficult scenarios, typical scenarios. These are actual videos and how he structured them, how he saved the loan. If you have any questions on ARIVE, like, how do you do this or that, ARIVE also has its own Facebook group. So go to ARIVE Mortgage Brokers. It is also very active. We do a lot of community events. They are all posted over here. Where should we hold our next event? I believe that's the poll which is going on. But yeah, how do you do X? How do you do Y? So anything on ARIVE, if you want to learn or you want to talk about what lender is best, we have a big community. We have more than about 11,000 members constantly answering questions, just like in Brokers Are Better. So you get this community support, which doesn't happen anywhere. So AIME and ARIVE have been partners for many, many years. We'll be partner for many, many years in the future. We are so grateful for the partnership. And we are excited to see Jonathon in this new role. We are excited to see the new things he's thinking about. I'm very happy the Fuse went to New Orleans. We were kind of tired of Vegas. And so thank you, Jonathon, for picking a vibrant venue where we can have a great time. So
yes, sir. We're looking for some special speakers. So I'm excited when the time comes. Like you said, I want to announce some of the special speakers here soon, but I'm looking to bring the heat. I'm looking to make it as exciting as possible and just provide as much value as we can to our community, man. So I can't thank you enough, Rich, for always, just being there and jumping on everything and giving back to our community as well, sir.
Yeah, thank you so much. This was, as I mentioned, one of the best webinars we have had for a while. So thank you, Jonathon, for your time. If you have any questions, again, reach out to us. But I want to thank everyone and happy weekend, everyone. Thank you.
Thank you, guys.